Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about AUDUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. At the moment, AUDUSD is a very interesting pair. Now, starting here from the monthly time frame, what we can see is that we have a market which is testing a quite strong historical monthly demand and support area. In fact, from here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it. Again, here tested and rejected. At the moment, the market is testing and rejecting to the upside, again, the exact same area, fueled by institutional longing. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is rejecting strong demand and support and drop down on the weekly time frame. Now, from a weekly perspective, the situation also here is very clear. We have a perfect example of an inversion of trend. We went from the creation of weekly lower lows and lower highs, so a clear downtrend, to then this fake breakout to the downside, so a market manipulation that in just a few moments I will speak more in detail about. And now the market has inverted to the creation of weekly higher highs and higher lows. So we had essentially an inversion of trend from weekly lower lows and lower highs to weekly higher highs and higher lows, with the inversion pattern in this case being a market manipulation that we will now dig deeper into. So let's keep in mind that here on the weekly, the trend is already inverted and drop down on the daily time frame. Now here on the daily, the market manipulation is very clear. We see a massive spike to the downside and immediately the market reverted higher. So all the stop losses that were placed below these lows got liquidated with this massive move to the downside. Now this happens when there isn't enough liquidity in the market, because keep in mind that for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. And if institutions have huge orders, which they do, and there isn't enough liquidity in the market to fill them, the manipulations can simply create that liquidity by triggering all the stop losses. And after that, the orders are actually filled and the move to the upside can actually start, which in this case is exactly what happened. And if you remember, I made a full breakdown of AUDUSD when the market was here, explaining all the reasons for which I was expecting this to be a manipulation and for the market to reject higher after this massive move to the downside. I also spoke about AUDUSD just a few days ago when the market was around this area, explaining all the reasons for which I was expecting more bullish continuation. And by the way, I will link in description these two previous analyses so you can go and check them out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have from a technical perspective here on the daily time frame, first let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's look at the data precisely for the AUD. Now, the first thing that we have to keep in mind is that if we're looking at the data for the AUD, we're actually already looking at AUDUSD, because all currencies on the spot are traded against the USD. And what we can see here is that net positions have been moving to the upside quite aggressively. If we look at the long run, we hit a low here at minus 77k. We are now at minus 63k, slight decrease from the most recent reports, but in the long term, it is clear that institutions have overall increased their longs from 19.7k to 23k. Actually, with the last three reports, we have seen steady increase in longs from an institutional perspective. And if we look at the long term, we have seen very high short positioning from an institutional perspective on AUDUSD. All these shorts have gotten closed. Basically, we went from 110K, we are now at 87K. There is the possibility, if the market will continue higher away from this demand and support zone, to see even more institutions close their shorts and longs to continue to increase. That is definitely possible in my opinion. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here in the daily time frame, this area is the resistance. From here, this is where these multiple rejections to the downside were created. Now, until the market will remain below this level, it can easily drop lower. However, if we get a break above the zone, that is where things get interesting, because a break above this resistance would make this previous resistance become support. And after the break on the retest of the previous resistance turn support, that is where, in my opinion, there is good probability to see even more institutional longing, further increasing the probabilities of a potential reversal higher away from this level. So if the market will break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.